Thanks for watching this video about the McClellan Oscillator. And what is that? Well, the McClellan Oscillator, it is a momentum oscillator. And it takes into account the entire market and not just one individual stock name. We can use it to assess the strength of the market trend. And how do we do that? It takes into account the number advancing and declining stocks, as well as the volume that's associated with each of those. So by doing that, it's hoped that this oscillator can provide us with a bird's eye view of the overall market and not just an individual sector of the market or an individual ticker. So when we take into account the overall market momentum, we hope that traders can use that to further increase the edge in the market. A little bit deeper on this oscillator, it's a market breadth indicator. It's the brainchild of a guy named Sherman and his wife Marion McClellan, and they invented it back in 1969. The usage is geared towards more short-term and intermediate-term trading, and it works by tracking the variations between the total number of tickers on the New York Stock Exchange that are either falling or rising. So a bull market, that's present when more stocks are making significant gains than losses. And as traders, we can use this data to make decisions about the stock market's current state and the health of it before we put on a position in a ticker. So why is that important? Because there are times when the market, it's just fueled by a handful of big names, and it can give you the impression that the market's strong. Now, depending on what sector is strong, those tickers could actually be supporting the overall market as other sectors are attempting to drag it down. The question is more money moving into the market overall, or is more money exiting the market? So if we know the backdrop of the overall health of the market, that can lead us to be more conservative with our trading or not even trade at all. So how can it improve our stock trading? Well, there's two main ways that we can interpret it: momentum and oversold. So the McClellan uses two moving averages, the 39 EMA, the 19 EMA, and the calculation involves the advances and the declines of the overall stock market. Now, the difference between the two EMAs is what the oscillator is going to plot. And if the oscillator is above the zero line, we call it positive. We can conclude that overall advances are the dominant force in the market, and the opposite's true. If it's below the zero line, so negative, declines are the dominant force. From that, we can see if the overall market momentum is bullish or is it bearish. So if the overall market's bearish and you're looking to buy, are you going to trade the same way as if the market was bullish? Probably not, especially when you look at it from a risk point of view. We can also use it to show oversold and overbought readings. So a reading below negative 80 is considered oversold. Above 80 is overbought. When the market's oversold, people think it's due for a rebound. When it's overbought, it's thought to be due for a pullback. Now, either of these readings, it's not an automatic buy signal or a sell signal, right? You're still going to want to ensure that there's a sign that your stock is set to reverse. So as an example, in an overbought reading, a price for reversal, it's not guaranteed, but if we see a topping pattern or an exhaustion thrust, we see that, well, that could give us some support that an actual reversal may be going to happen. So we can add this oscillator as part of a trading strategy in a few different ways. One is use momentum readings from the oscillator to help time our entries. So if the market is overall bullish, so positive, then we're going to look for individual stocks that are showing short-term weakness by forming patterns, like a bull flag. You can enter off of those. Another way we can use it is oversold, overbought. So if the oscillator is oversold, looking for bullish chart patterns or bullish candlestick patterns to enter the market is what we could do. If it's overbought, look for bearish chart patterns or bearish candlestick patterns to enter the market. So here in this example, we have a price action downtrend, and we are just taking advantage of price patterns and the overbought readings, only the overbought readings of the indicator. So as always, it's really important that you have a well-rounded and a tested trading strategy that's going to take into account different factors of trading, like your risk tolerance. And you need to know that before you make any trade. Now remember, the oscillator is showing the momentum of the overall market. So you could be looking at a ticker in a sector that's weak, and any buy signal may be short-lived. So you can't go wrong by using a price action definition of trending structure. So if you're seeing a price structure uptrend in an overall positive market environment, you've got a pretty good candidate for a trade to the upside. Now, the oscillator is good, right? It's handy. And some traders, though, are going to appreciate this one. The McClellan Summation Index is a breadth indicator, and it's a long-term version of the oscillator. So it's used to gauge the overall strength of the market by taking into account the advancing and declining issues over a period of time. So it's cumulative. So unlike the frequent crossings of the line that we see with the basic oscillator, right, the zero line, this one is going to give a better indication of bias over the longer term. Now, getting on board a longer term trend has the potential for massive gains, right? And using divergence is a viable approach for a heads up that a turn may be happening. So here, the stock was drifting lower. We see the MSI make an obvious higher low, while the stock price made a lower low. This is called bullish divergence. A trader would use any of your entry techniques, if they're appropriate, to get on board the next move. Now, let's be honest, it's not perfect. No indicator is, but it can certainly be helpful to help us gauge market momentum and identify overbought and oversold conditions. So when we take into account the overall strength of the market, as well as the individual stock price action that you're looking at, we can use this indicator to help time our entries and our exits into the market, as long as it's part of a full trading strategy. Thanks for watching. Hope you enjoyed this video, this little look at the McClellan. Hit like and hit subscribe. We'll talk to you soon.